Hello, everyone. Welcome to this ESS BIZTOOLS webinar today, Starter Package, your launch into business advisory services. I'm Peter Towers, the founder and managing director of ESS BIZTOOLS. If you're watching this webinar presentation from social media on the live feed, welcome. If you have any questions on any of the matters that I discuss in this overview of the starter package developed by ESS BIZTOOLS, can you please send me an email and I will get back to you, peter@essbiztools.com.au. If you're watching this webinar live and you have a question, please go to chat and type your question in. Or if you're watching this webinar at a time more convenient to you and you have questions, by all means, please send me an email, peter@essbiztools.com.au. We're here to discuss a very important subject today. Why do so many small businesses fail? And why does this keep on happening every year in Australia and I suspect around the world? But that's no excuse for Australia to just say, well, we can't do much about it. A lot of people believe that if you can survive in business for a couple of years, success will naturally follow. I believe this is a myth. That's not correct. And in fact, one of the world's great experts on small businesses, Michael Gerber, author of the E-Myth series, said in a webinar recording that I watched only 2 weeks ago, 98% of small businesses fail before reaching their 10th anniversary. 98%. That's a dismal statistic, isn't it? Now, there could be various reasons why various businesses have dropped out in that period up to 10 years, but a lot of them failed because they had not properly prepared. So the challenge and opportunities for accountants and bookkeepers is there, because if you look around the Australian scene, who else is there that can really advise SMEs? Sure, they need a lawyer for some of their work. They might need a web designer. These days, nearly essential. They might need someone to mentor and coach them on AI. They might need some training on company directors' duties. They might go to the Australian Institute of Company Directors diploma course. But the one profession that's sitting there able to offer ongoing, realistic financial management services is accountants and bookkeepers, you people, primarily. So what can we do about it to make life a little bit easier for businesses? So many small businesses do start with a passion and an optimism, but few have a plan or a mentor. And most importantly, too many of them do not have a system. Accountants and bookkeepers, I think we've got a great role to play here, offering guidance, structure, and insights. And the role that ESS BIZTOOLS adopts in all this is we are using my experience as an accountant, a director, company secretary, chief financial officer of a listed public company, to bring that experience to play so that we have written material that you can use to deliver this outstanding range of services to your SME clients. So let's look at some of the comments that Michael Gerber made 2 weeks ago in a recording with David Denions, the CEO of Systemology, which is a very interesting system, and it's a great book. And he was retained by Gerber to do some promotional work for Gerber himself. At 88 years of age, Michael Gerber has still got everything, and he was a very interesting man to watch in the webinar. Some of his comments: business is a system, and therefore we need to have systems implemented right from the very start. Business with a system is a brand. It helps identify the business because every conceivable question that can get asked by the team, by suppliers, and by customers, there should be a system for it so that there's uniformity in approach and hopefully responsibility spread throughout the organisation. Business operators need to recognise your business as a system. So if you go to the trouble of implementing it for a client, make sure they then follow it. And therefore, one of the big messages that I would add to what Mr. Gerber had to say is just don't go off and write a system on your own. Make sure your client is signing on to it. And then the leadership team within the client's business is signing on to it, because for 98% of the time, they're the people who are going to be implementing it. And Gerber says if there's no system, the company falls apart very quickly. It's important to strategize the work to be done. Visualize the end result. Very important. This is all at the beginning of a business. Visualize what the end result's going to be. It'd be very interesting if your clients would write that down and you could revisit it every year to see how close they've got to their vision. Leadership is critical to the creation of systems because the importance need to be understood. Why are we going to this trouble of developing systems? Why are we visualizing what this business is going to be looking like? They're doing it to ensure their survival. Those statistics, 98% failure within 10 years, are absolutely shocking. A lot of business leaders don't tell their team what their vision is. I don't know how the SME operator believes that the team is going to fully function if they haven't expressed their views, their guidance, their strategy, what they're trying to achieve in the business. Can you imagine a movie being developed or made without a script? That's one of Mr. Gerber's questions. And then he said, or a musical without a music score. So what he's trying to highlight is other things which we are familiar with. We go to movies, either in a movie theatre or watch movies on a TV. I think we all appreciate that someone sat down and wrote all that material and the actors have memorised it and they present. What's the difference with a business? A business also needs to have written down what the idea is, what the strategy is, what the plot is, what they're trying to achieve. Same with a musician. The leader needs to identify their vision. So where does it all start? According to Gerber, it starts with the dreaming room, where every business journey should commence. Preferably before your client starts a business or buys a business, they've sat down and thought about it. And the great example is what happened in McDonald's. Gerber indicated that the McDonald brothers had created a great hamburger store. That's why he visited them. They were one of his customers. He was a salesman for some sort of cafe manufacturing equipment, production equipment. And he was amazed at the number of times they reordered the same equipment. They weren't complaining that it broke on them or just wore out in the first few weeks. They were just reordering. So according to the story that Gerber told in the video, Ray Kroc travelled across America, one side to the other, to go to the McDonald brothers hamburger place and sat down with them and asked them why they bought so much. And they said, we're so busy. Look at this. We're flat out. And he talked to them about franchising. And they said, yes, we tried franchising, but we couldn't make it work. So Ray Kroc, a 52-year-old sales representative, was curious. So he said to them, well, I'd like to enter into a business relationship with you. Kroc, who had had no formal education, had no qualifications, but he saw an opportunity. So he negotiated an agreement with the McDonald brothers, but he immediately went and got a separate facility, which he called his corporate office, where he established the dreaming room. And he sat down, I assume, with the McDonald brothers at various times, away from the day-to-day hassle of their business, and dreamt up and thought about and planned how a McDonald's store would operate that was able to be run separately. And this led to the start of what became the McDonald's franchise business. Now, McDonald's have grown, of course. I think we've probably all had a McDonald's, and there's now 40,000 franchises worldwide. And I know a few people who travel the world on business who make a habit of going into a McDonald's and comparing the service in Norway against the service in Australia, or in Canada against the service in UK, and so on, and find that invariably there's no difference. It's the same excellent service. So the system has worked. So this was the successful outcome of the dreaming, which then led to the design of the systems. And all this was done before Ray Kroc took it any further. And then he showed it to the McDonald brothers, who apparently ultimately went along with the concept, but then decided they'd like to just remain with their little store. But ultimately Ray Kroc brought into that. So the rest is really history. Key questions to be answered in the dreaming room process with your client. What type of business do I want to create? Where will it operate and how? Who are going to be my customers? Am I buying a business, so am I obtaining customers? Who are my suppliers? What are their trading terms for me? Those of you who listen to our webinars regularly will know that we've talked about problems that get identified from time to time, whereby people starting off in business have not really checked out with suppliers and don't know that a number of suppliers are now imposing cash on order type terms until the new account has proven that they will pay their bills on time. And that can lead to great shocks. MYOB did a survey on that in February 2024, which highlighted significant cash flow problems that businesses that had started in the previous 6 months run into. And one of the big reasons was they assumed that suppliers would automatically give them 30-day credit terms. And in many cases, that had not happened. And they ran out of cash. What licenses are needed? What staff will I need? What classifications? What training? What uniforms do I need to put them in? And where am I going to get them from? What other resources are needed? And there might be plenty of items to go there. And then we get round to the systems. What systems do I need to manage stock? So that means there needs to be an inventory system. Where's the stock going to be stored? Who's going to be responsible for it? Who's going to order it? Who's going to check it in? Who's going to make sure the quality is what was quoted for and paid for? The debtors management system, very important. This was another problem that MYOB's report identified. The two problems immediately of debtors. Apparently, those new businesses, a number of them assumed that anyone that asked for credit, they were legally bound to offer them credit terms. Definitely not on. But they had no debtor system. So no one was being asked to complete a debt application form so that they could be checked out. Their referees could be contacted to make sure that your client was not, in fact, obtaining someone else's problem. And what was the processing? Was there a letter of confirmation of the credit terms that are being offered? Was there follow-up 3 or 4 days before the due date for payment based on the due date for payment based on the tax invoice date? Had there been some thinking go into it? And the other big problem was according to MYOB, a significant number of people assumed that everyone would automatically pay them within 30 days. That would be lovely, wouldn't it? And Australia's got the longest debtors' days outstanding in the world, according to an international report a few years ago. And I haven't seen anything recently which would tell me that debtors' days outstanding has reduced. And the cash flow. How's the business going to be financed? Is someone keeping an eye on what's going to develop down the track? Where's the key products coming for this business? What's been planned? Are they got to be imported from overseas? If they're anywhere further than probably New Zealand, international shipping has to be taken into account, because unfortunately, around the world, we've got wars, and the wars interrupt shipping. So it might mean that the client has to hold more stock in Australia. So what's the financial impact of that going to be? Because presumably the supplier of that raw material or that original stock, they want to be paid. They're not particularly concerned with how long your client's got to store that stock in Australia, so that they've got a regular supply of inputs to go into their production processes or whatever they're doing. So these are just few of the items that come under the general heading of systems. Your client needs to have agreed what system's going to be implemented. Now, they're going to need your assistance for these items, because they're all financial matters, aren't they? And many of your clients will not have thought about the importance of debtors' days outstanding, for argument's sake, making sure it's calculated, looked at, and that credit customers are followed up to make sure the payments received from them. They then need to prepare a business plan. Every business needs a business plan. And it might get reviewed a couple of times, even in the first 12 months. And after that, it should settle down. But it should be a living document, not just something that's produced and thrown in the bottom drawer. And definitely not, it's not a document that's produced for the client just to give to the bank manager and forget about it. In lots of ways, I think it'd be preferable if they didn't start it, if that's how they're going to treat it. And you need to impress the client that the business plan has to be a living document. It should be reviewed every month. Who was supposed to do what this month? Have we done it? Now, there's going to be heaps of occasions where things haven't been done. I'm a bit guilty of that too. Sometimes I've got to lift up both arms. But the key thing is it's then regulated. Well, we never got those jobs done. We need to make sure we double down on getting that done in this new month. It's not just forgotten. And the financial forecasts, which are the financial interpretation of the business plan, the budgets, the cash flow forecasts, the key drivers. The key drivers are very important. So that's the terminology that we've given for key sub-accounts: inventory of raw materials, stock of completed stock, debtors, creditors, work in progress, capital expenditure, all these items which can get hidden within the cash flow forecast budget papers. But I think it's very important that you have it in a sub-account as key drivers so that it can be monitored every month, because if the calculations in the budgets and cash flows were done that the maximum stock on hand was going to be $220,000, and because it's been monitored month by month as the budgets are updated, you now look at it and see it's $390,000, you could start asking questions. Why has this happened? Why have we invested $170,000 more into stock than what was planned? Because that has got to affect cash flow, hasn't it? Because presumably it's been paid for. And the other big thing to watch, of course, is debtors. If you've done the original calculations on an assumption that the debtors would pay, let's say, in 35 days or 40 days, but by monitoring it, you find that the debtors' days outstanding are up around 58 days or 63 days, or as I found in a seminar I ran a couple of years ago, 102 days. and the original budget's been set back at 35 days, it's going to mean that your client's got cash flow problems. And the quicker they can get fixed, the better. So we're not preparing any of this documentation just to make it look nice and satisfy someone like a bank manager, with all due respects to bank managers, or even to make you happy as the accountant. It's there to become a tool that's used, just like a map for tourists. You design where you're planning to go, where you're going to drive to. You look at the map to see how much further it is. You might have some children in the back seat saying, "Are we there yet?" And you can get out your map and tell them, "No, we're not there yet." Well, the same thing applies in a business. And if you're going to be the key advisor to SMEs, you need to be approaching on this basis. This is far more important to your client's future than preparing their tax return. Tax returns are important. They're a byproduct of all of these processes. Somehow or other, over the years, there's been this assumption that all that a business needs is a tax return or an annual set of accounts. Annual set of accounts doesn't help anyone. It's the weekly performance and profitability report that's important, because if there's a problem, it should be detected within a couple of days at the end of the week and then investigated and hopefully fixed. So all this should be undertaken before any major commitments are made. It's the blueprint for the business. It's a written systems manual. Gerber said, "A business without a system falls apart." I think you should be making sure your client understands that. Actually, I think you should be recommending that your client obtains a copy of E-Myth and reads it, Gerber's original book, and then follow through with a few of the others he's written since, so they understand that all these systems within business are very important. Systems make businesses sustainable. Every successful enterprise is built on well-defined systems. And really what a system is something that's written, it's a repeatable process. Same thing might happen every day or every week or every month, that guides daily operations and decision-making. It's a system. I'll never forget when I was Chief Financial Officer in a listed public company and we had to prepare consolidated financial accounts at the end of the financial year. Very important. And I was new to the job, and my predecessor hadn't left on a good note, and I don't think he'd been there the previous financial year in any case. So I went looking to try to find any notes, any system on the approach to the consolidated accounts, because like a lot of public companies, we're a whole stack of subsidiaries. And I couldn't find anything. So I rang the auditor, who'd been the auditor for quite a number of years. And he said, "Oh, yes, we've got something here. I've kept it. Isn't it in the files you inherited?" I said, "I can't find it." So he turned up with the notes, but then he had trouble reading his own handwriting. We had to get his secretary to come out and decipher what he'd written. I made sure then I got copies of the consolidation process and made sure they were embedded into the systems manuals that I'd written for that company. And I ran into one of my successors a few years later and I said, "How's everything going?" He said, "Thank goodness you had that documentation all there. We just follow it through. That's why we've never contacted you since, because it was all there." Very important. Without appropriate systems for SMEs, mistakes multiply. A mistake made in this week, if it's not picked up and corrected, it's just as likely to continue again next week and the week after, and it could go on for 52 weeks if it occurred in week 1. And then before someone really looks at it, it might be we're in week 20 of the following financial year before someone's seriously looking at the financial accounts. And that leads to chaos growing because there's not enough money in the bank. And it could be because there's been a mistake somewhere in various pricing or calculations. And I'm going to show you a real true story on a pricing calculation shortly. That really did happen. So chaos grows. Financial management becomes guesswork. That's not the way to run a business. There needs to be foundation. So you need to make sure you've got the systems. Now, within ESS BizTools, we have developed systems, but I'm not suggesting you just go in and implant them into your client's business. You work through with the client when they're going through the dreaming room process and then customize various aspects of it to suit the business requirements or the client's own preferences. So we don't have guesswork. Small business operators have a lot to worry about. Have you ever actually sat down and thought about what goes on in your client's business? We have an article in ESS BizTools that looks at about 40 different management responsibilities that someone's responsible for. Now, in a small business, most of that falls back to one or two people. That might be the husband and wife who are the owners of the business. So they've got to worry about everything. In a larger business, that responsibility gets spread. There's still a fair bit goes to the CEO, but in a well-planned organisation, a lot of it's spread amongst others. Chief Financial Officer, internal accountant, sales manager, marketing manager, production manager. All sorts of other people can have their responsibility. But in a small business, all those job allocations can come back to one or two people. When even one of these responsibilities is forgotten about or not looked at, it can lead to chaos. And the big one that I am going to refer to, because we're talking to accountants, is pricing, budgeting, debtors, cash flow. If they're ignored or mishandled, the entire business can be at risk, as I'll show you shortly. And this is it now. Even experienced executives need financial systems and expert guidance to succeed in small business. Now, I'm sure we've all had the client that comes to you who has worked in a major government department or a semi-government organisation or been a senior executive even in a big company. And will indicate to you that they know everything. They know it all. Well, my experience has been to be very careful of that situation because I went through one, which I'm now going to share with you. A former managing director of a public company purchased a retail store in the city that my accountancy firm was operating in. And he was referred to my firm and he came and saw me. And I went through the process with him. And basically we were indicating that we had regular accounting support, which was built around monthly financial accounts, key performance indicators, and sometimes we'd agree to quarterly, but we really wanted people on monthly financial accounts. Otherwise, quite bluntly, they could go elsewhere. And he said, no, I know all about business. I've been a public company managing director. I know all that. I just want to sit down and have a cup of coffee or a beer with you every 3 months, and I'll tell you how I'm going, and you can give me your feedback, and you look after the taxation side of things, and I'll be happy. I debated it, and I said, oh, okay. 2 months later, I get a panicky type phone call early one morning, and he said, someone's stealing from me. Can you come round to my business? I need you to have a look at it. I need you to find out who's stealing from me. So I thought I better go and see what this fellow was on about. So when I got there, I looked at what was happening and I said, well, okay, how do you set your pricing? Because he was telling me that they were very busy, and an observation of the store told me they were busy. There's people everywhere. And the bank account was going down. I said, how do you price your products? And he sat there and looked me straight in the eye and said, the landed price plus the gross profit percentage. I said, that's not correct. Well, he argued with me for 5, maybe 10 minutes and told me 3 times he was the ex-managing director of a public company I said, you've applied the wrong system. You should have been applying the markup percentage. Now, once I'd finished explaining that to him, he started eating a bit of humble pie and said, oh, my apologies. In fact, in my previous career, I was more of the marketer and the ideas person. I had 2 qualified accountants working in that company, and they did all the pricing calculations. They did all the monitoring things in the business. They just come and gave it to me, and I signed on the bottom line. So this was a great lesson to me. And I'd obviously worked with a managing director of a listed public company, and I'd met others. And whilst those gentlemen and ladies can be very smart, they don't know everything. And if they're good operators, they really rely on a group of senior executives who they've delegated responsibility to, who are then giving them feedback. And that was what this particular gentleman had overlooked, that he had 2 qualified accountants there who were obviously doing a good job. They did the calculations correct. They knew that if they had a cost price, landed price, it was the markup percentage that was being added, not a calculation of what the gross profit would be on those items. So he immediately signed on for the full advisory services because he probably sensed my mood that I wasn't going to continue with him unless we were fully involved. In the middle of all this, he got interrupted. A supplier was on the phone and needed to talk to him urgently. So I wandered around the store, which was very busy. I thought, no wonder. They're selling goods below any other supplier in their area. And I ran into a lady who I knew who worked there. And I'd known her when she worked in another business, and she was a very good operator. And she said to me, you sorted out his problem? I said, yeah, but why didn't you? She said, Peter, I tried. I talked to him. I said he was doing something wrong. You've obviously worked out what he was doing wrong, but he was just undercharging. And he wouldn't listen. Told me he was the ex-managing director of a public company and he knew how to do all this. He'd run big businesses. So later on, I really had a heart-to-heart with my client, because at that stage I wasn't particularly worried whether he remained a client or not. He remained, and he apologised every time I saw him. I said, it's not to me you've got to apologise. You need to go and apologise to at least one of your staff, and I suspect quite a number of them, who you may have given that answer that you were the ex-CEO of a public company and you knew what you were doing. They were giving you advice, and in the end, they just decided to shut up. It also should have been a good clue to you that why was your store so busy? Didn't you get the visitor numbers, the customer numbers from the vendor who sold the business to you? You should have known you'd done something magical to increase the customers so significantly. People were chasing your specials. So running a small business is lonely. Because there's no CFO to ask what if. And I think I've perfectly explained it by that example of the former client I had. He had no internal accountants to ask the question to. So he ploughed on, made a mistake. Thank goodness he was watching his bank statement and he realised that it was going backwards and he knew they were busy. So he sung out. I think we need to be also saying to our clients, make sure you do talk to your senior, experienced people. They should be part of the leadership team. They should understand what you're doing and say, hey, hang on, are you sure that calculation's right? Most SMEs have got no internal finance team to test ideas. When I was the CFO in a listed public company, every day I would have what-if questions. And it didn't matter where in the world our CEO was. If he was in New York or London, Japan, anywhere around the world, there would be messages coming back. Hey, Pete, can you do this calculation for me? Can you tell me if we can switch from the Japanese market to the Russian market? And this is the specifications. We're in the meat industry. So it was these what if type questions. This isolation often leads to avoidable mistakes and ultimately failure. And this is why accountants and all bookkeepers have got to fill the vacuum. There is a vacuum in small businesses because there's no people there. But with today's technology and communications, I think we can supply that service. In fact, I know we can. This is why I think you should be proactive from the first engagement meeting with someone proposing to go into business or to purchase some business. That part of the engagement with your firm will include that you are going to supply regular accounting support. That's vital. And quite frankly, if the client doesn't want that, I think I'd be saying good luck and showing them out the door. Because there's plenty of other people out there looking for services. Why should you be taking on someone who's probably going to be one of those disastrous statistics and fail very early in their business? Because they need to be building in the cost of the regular accounting support right from day one. This is what's going to cost you. 20,000, 30,000, 50. I got a couple of subscribers are telling me they're earning $120,000 in the supply of virtual CFO services to clients. It needs to be factored in. Now, I don't think $120,000 would apply to a very small SME, but you work out your costs, work out the systems, who's going to do what, and talk to your client. And if they don't want it, I don't think you should be servicing them. The key infrastructure to be implemented. Encourage a new client to spend quality time in this dreaming room, thinking before starting or purchasing a business. How are they going to run it? Get them some butcher paper. Remember the butcher paper? I used to use it all the time when I did seminars. I probably should have checked you could still buy it. But if not, writing pads, and encourage the client just to write down the ideas. But in our system, you've got a list of the 40-odd key departments within a business. Who's going to do the purchasing? Who's going to do the pricing? Who's going to do the hire of staff? Who's going to set the wages? And so on. Because it all happens. And a lot of that can get delegated, but it might require some training, of course. So people need to be encouraged to really face up to the facts. Otherwise, they can be on a disaster in a business. And I was always suspicious that people told me that they knew it all because they'd had a senior job in a government department or a big company. And my example there, which I was the accountant involved in that overview of the public company ex-managing director, who's now passed on, so but I definitely never reveal his name. But that was a true story, and I'm sure you have probably come across similar ones yourselves. You need to identify the systems to be introduced for the business and encourage the implementation of a rhythm of meetings, daily, weekly, monthly. The daily meeting might only be for 5 minutes, but it should be held. Someone should be the scribe taking down the notes, and a daily one-page report can be produced. Very simply, it might have the bank balance as this, the amount of money we're expecting from debtors this week is this, the amount of bills which we've got to pay this week are this. Now, that might be highlighting to the leadership team that there's going to be a cash flow shortage this week. So get on your bike and go around and collect the money that you were supposed to collect a couple of weeks ago from your customers. Work with the client for the development of the business plan. I do not subscribe to the theory that I know some people implement where they just go off and write a business plan. Similar to the one they wrote for another client last week. I don't agree with that. I think you need to be seated there with the client and preferably some of the leadership team or all the leadership team members and work through the business plan. Because at the end of the day, you want them to have ownership of that plan. Why? Because they're the people who have to implement it. Sure, you might be looking after the financial side, and I hope you are, but there's plenty of other things in a business. From the business plan, you can develop the budgets, the key drivers, the cash flow forecast, the projected balance sheet. So you can say to your client, this is what your balance sheet should look like in 3 years' time. It gives them that vision. That's what we're aiming for. You know, there's some very lonely periods in running a business. And I'm sure those of you who are running your own accounting or bookkeeping firms know that. But think of it from your SME client's point of view. Most of them have poured all their life savings into going into a business. They've mortgaged their house more. They've done things. They might have borrowed on their mother-in-law's house to get the money to go into the business. I think we have got to do as much as we can to make sure that this is a happy journey, that they're going to succeed in business. And all that's going to be reflected in the budgets, cash flow forecasts, as a reflection of the financial interpretation of the business plan. It's very important, the weekly performance and profitability report processes, which we have in ESS BIZTOOLS, because this is what the big end of town does, that I found out when I joined a public company. They've been doing it for years, weekly reports. Woolworths do it, Coles do it, my IGA stores franchises do it, because I've done some consulting work for some of them. They know by Monday afternoon, Tuesday morning, the results of their 40-odd departments in a store the day before. So do the Woolworths and Coles stores. Have you ever thought about those small businesses that are always outside a Coles or Woolworths or an IGA store in those big shopping centres? Ever wondered how they're running their business? The Coles or Woolworths or the IGA store, the general manager of the store, Monday afternoon, Tuesday morning has got the results for the week. He knows the sales made by the various 40-odd departments, knows their gross profit percentage. They've allocated direct expenses where they can. They've then got their overhead expenses. They know what the results were. And they're able to compare it to their budgets, their expectations. This is what we thought we were going to do. The Woolworths and Coles systems really also target shrinkage, pilferage, so that they've got an idea of what that's been, trying to improve their security. And then 30 or 40 metres outside that store, there might be a small business competing as the butcher shop or a delicatessen or a chicken store or whatever. And there's a similar business located within the Woolworths or Coles or IGA. Yet that guy in the Woolworths, Coles, IGA by Monday afternoon, Tuesday mornings had his, hopefully a happy chat with the general manager of that store and been told, yeah, everything worked out all right. This is your result. The general manager's happy, so he's giving him a tick. What does your client do? Are they going through this process? Because in my experience, most of them initially will not do it. They will need you to be telling them this is what they should be doing. This is the system to help survival. And if you don't want to sign on for it, well, please go and get someone else, because unfortunately, you're probably going to end up one of those statistics, as sad as that is. Establish the preparation of monthly financial reports in comparison to budget, not quarterly, monthly, so that it becomes routine. And it's followed by a meeting of the board of directors or the board of advice, and we go into both of those roles in our packages, or it's the leadership team. But you sit down and talk to your clients about what the results have shown. And part of this process is also to look at the key performance indicators and business metrics. They're just not fancy words. They really mean something. And I found in the meat industry that I spent years of my career in, that the key figures, the yield percentages, the various temperatures, and all sorts of other things were embedded in the minds of the foremen and the managers. So they were looking to get that feedback. You need to make sure it's getting produced for them, and it's in their jargon, not your jargon, not accounting terms. It's understandable to the foreman. Continually review the cash flow forecast. I've talked about that earlier, and I need to emphasize it. One of the real problems of small businesses, they run out of cash because there's not enough forward planning going on in looking at it. Ensure that each month the financial report is prepared and submitted. A package of services to establish advisory services within your firm. Are you interested? ESS BIZTOOLS will give you the package to be able to assist your client in the dreaming room. We offer firm training on the financial, commercial, management, accounting advisory services. They receive a Business Plus newsletter, or you receive that in your subscription, which you can badge. We want you to badge it with your firm name. You send it to your clients. And there's 6 articles in each edition for talking to SMEs at various stages of their careers, what they're trying to do. And what you should do is go through and read it before you send it out and identify which of your clients you think will be interested in which article. And then phone them 3 or 4 days later. Say, oh, did you read the newsletter? What do you think? What do you think about that story about raising capital? You can do it as a crowdsourced funding equity raising company. You might still own 60, 70% of the business, but instead of having to mortgage your house again, you've had shareholders come into the business. Over $360 million has been raised in Australia in this process. Gives them some assurances. The SME needs analysis is very important because it's helping you to identify what the client needs. Talking to the client. We've got papers which you can badge and send. There's about 330 for the starter package. Information that will help your client run better business, but also will be confirming to your client that you understand more than just taxation. A lot of SMEs think that accountants in public practice only know about taxation. And whilst taxation is important, as I said earlier, it is not helping people run their businesses. Client mentoring and coaching, the resources you can use to promote. Client seminars that you can adapt to your own use, or you can look at the way we've done them and you reproduce your own. Resources for you to deliver financial, commercial, accounting services. I've listed some of them here that are in the starter package. Establishing systems for your business, what we've been talking about, based on Mr. Gerber's comments. Business planning introduction, budgets and cash flows. Price setting, to make sure you don't run into the problem that the ex-managing director of a public company did. So we've got retail businesses, we've got separate processes for tradies businesses, and then separate for professional service firms. Buying a business. Debtors management, we talked about that. The debtors systems manual. Research and development introduction. I haven't mentioned research and development today. Very important. Over 7,000 SMEs participated in research and development activities and claimed the taxation benefits in 2022-23. They're the last figures we've got from the tax office. More figures will be coming out soon. Selling a business, government grant applications. So these are the packages you're getting to deliver a business-enhancing advisory service. So please visit our website, www.essbiztools.com.au. Click on packages and pricing, and then click on the starter package, and you can get an overview of what's included in the system. I basically summarised it there for you, but that'll give you a bit more information to look at. The bad news, of course, is the Australian Small Business Ombudsman has indicated that 2025 is the most difficult year ever for small business operators in Australia. That's not a very good statistic. The logical group of advisors to help people overcome these problems are you, accountants and bookkeepers. So why not gear up for 2026 now, so that come mid-January, you're ready to go. You've got the package. You can start offering these services. If you've already been offering some advisory services and you want to move on and start at a higher level, we have packages for you. We've got the advanced package and then the financial forecasting package. This package, the starter package, is as the word says. It's when people just want to start moving into offering advisory services. This will help you get underway and you will start earning fees virtually within a week of the subscription to ESS BIZTOOLS. I've developed all this material based on my knowledge as an accountant in some different roles, from public practice to CFO, company secretary of a listed public company, consultant on a major Australian government grant program. I think I've seen a lot of the activities that confront SMEs. So have a great day. I look forward to hearing from you. If you have any questions or comments on what we've discussed today. Goodbye. And I look forward to hearing from you at a time that's suitable for you. Goodbye.